A cash budget for a company or a sole proprietorship, any form of business, can be for 3 months or a quarter, could be half year, could be for an entire year. And it involves trying to forecast when exactly a business is going to be short of money. So we are making a format keeping in mind it's going to be for 3 months, but it could be for any number of months. So you can think of month 1, month 2, and month 3. Now, we begin with an opening balance. And then we think about sources of cash or cash inflows. So we can put them under the title receipts. So under receipts, think of how a business receives money or gets money. We can have cash sales, collection from debtors, then think about sale of any asset. At the end of the day, that results in money coming in, so sale of asset. Then think of indirect incomes or non-operating incomes. So let's call it non-operating income. And the kind of stuff you can expect under non-operating income is like rent received, interest received, dividend received, also perhaps any refunds received, income tax refunds maybe. Think about advance received from customers, so advance from customer. And there can be many other instances where the business receives money. All of these will be placed under receipts. Once you are done listing them down, we'll have total receipts. Next, we look at payments. Payments, you can think of cash purchases, think of payment to creditors, then any expense, so expenses, think of salary, rent, utility bills, electricity, telephone, etc. Then purchase of assets. The same way you can get an advance from a customer, you can give an advance to a supplier. You can think of tax being paid. All of these things come under payments. If you're a company, you can end up paying dividends. You can end up paying interest, repayment of a loan as well. And of course, anything else which would be considered money leaving the business or a cash outflow will be part of your calculation. Now, once you're done listing down all the payments, we can have total payments. And finally, a closing balance. Now, if you look at the entire format of a cash budget, we have an opening balance, which we can label as A, we can have total receipts labeled as B, total payments labeled as C, and a closing balance, which is A plus B minus C. Your opening balance plus the money you receive minus the money that you pay is the money that you have left at the end. And keep in mind, if you began with perhaps X amount of money and you've received and paid money at the end, the number left is Y. The same Y that you have here, the closing balance at the end of one period, becomes the opening balance at the beginning of the next period. Same logic, you have Y at the beginning of the next month, and it could be Z by the end of the month. The same closing balance at the end of the month becomes the opening balance in the next month, and we end here.